Is Tesla stock a roller coaster ride worth taking? The stock has fallen 40% since its all time high of $480 just 2.5 months ago. Well, this sounds alarming. It's par for the course when it comes to Tesla. And by the way, same is true for NVIDIA and other top stocks. Today, financial analyst Cern Basher will share with you a few important insights you need to know if you want to be invested in Tesla. First, we'll look at just how volatile Tesla stock has been. Second, how important is a bad quarter like the one coming up? And how can you spot earnings growth like NVIDIA had prior to its stock shooting up? Third, Cern will show you his research showing that all of Tesla stock's gains since its IPO happened overnight, not during the day. And finally, stay till the end when we discuss the Elon Musk paradox. Cern Basher is a chartered financial analyst who's currently running his own investment advisory firm called BrilliantAdvice, providing wealth management services. Welcome, Cern.
Hi, Herbert. Yeah, I think we've got some interesting topics today.
Now, this is the topic of the day, the topic of the week, and then maybe the last few weeks. Stock has fallen significantly. A lot of investors are concerned, trying to figure out what's going on, what's impacting it. And that's why I'd love to bring you on. You've done quite a bit of research showing how do you look at Tesla stock and the things that are making it move or not. So you've got a few slides here to share. And let's get started with this. So first, you had this post on your X account. You said Tesla stock got you down. Do you see Elon freaking out when you know what's coming? Robotaxi, Optimus, Dojo, Semi, everything. You look at stock declines with a very different perspective. But yes, Tesla stock is freaking out quite a number of people. And I like this one. Is this a ride worth taking? The drop was significant. Comments on this before we start showing some of your data points?
Yeah, I mean, the point I'm trying to make that's maybe more succinctly made is, when in doubt, zoom out, right? The daily stock machinations are, sometimes fun to watch and other times very agonizing and sometimes hard to understand. At the end of the day, a company is there to grow its earnings. That's why you're invested in the company. There are many pathways to get there. Most often, it's not that smooth. And in fact, if you look at history of any successful company, it's never been a smooth ride. Maybe it feels like Tesla is more of a wild ride than other companies, but the answer to that is no, it's not. So I just want to remind people in terms of Tesla's behavior as a stock is very similar to what we see from other very successful companies.
Okay, and you were going to show some slides here. Some of them we have shown in previous shows, and others are absolutely brand new. So thank you for sharing that and telling the story here. So this one we've shared it before. This is the drawdown, right, for Tesla stock, and every time this is the peaks. Every time it hits a peak, all-time high, and then how deep some of these drops can be. Look at this, over 40%. This one is like almost 75% before it finally eventually went back up. They're here again. Yeah, what
It's
are we looking at?
Well, this chart's really interesting because since Tesla's IPO on June 29th, 2010, there were 3,688 trading days when I ran this
Mm,
analysis. Now, when that red line hits the top of the chart there, that means the stock's hitting a new high.
mhm.
Any guess, Herbert, out of those 3,688 days, how many days during that time period did Tesla hit a new high?
Didn't you tell me 42? Is that the right number?
Now it's 170 days.
Okay.
Yeah, so 4.6% of the time,
Mhm.
Tesla stock was hitting a new high. The other 95.4% of the time, the stock was
Mm.
trading below its high, and sometimes, as you can see, quite
Wow.
significantly below, right? And so, everybody enjoys new highs, but you know what? You're gonna spend very little time there,
Wow.
right?
Okay. That's pretty
And you
cool.
you look at this chart and you sort of wonder, how can any stock make any progress if it has this kind of behavior where it's down 35% a good portion of the
Mhm.
time, or down 40 or 50 or even more percent?
Mhm.
Right, and right now the stock's down roughly about 40% from its last high, set just 47 days ago, right? That's a recent memory for us, and yet the stock is already 40% below that.
Mhm.
And for a lot of people, it feels like the world's falling apart as it pertains to Tesla stock. They may also feel the world's falling apart for other reasons, but when it comes to Tesla stock, these kinds of declines suddenly cause people to be on edge. And what I'm trying to show here is this is a roller coaster that's typical, it's normal. And it's not just Tesla.
I love it. That's a great stat, by the way. So less than 5% of the time is at an all above all-time highs, at all-time highs, and the rest of the time it's going to be below it. Yeah,
Yeah.
it kind of makes sense now that you think about it, because once you hit it, does it keep going up, and then eventually it's going to be below that number. Um,
Yep.
okay, and this is Nvidia, right?
This one's NVIDIA, and so the chart is similar but different. Its peaks and valleys came at different times than Tesla. It's also had a number of declines in its history. And again, by the way, I'm measuring over the same time period here as Tesla,
Hmm.
just to make things directly comparable. So it's since Tesla's IPO.
Hmm.
Um, but there are a number of periods here where NVIDIA went down a lot, and those were brutal periods for investors. Now, in recent years, the ride's been a lot more exciting for NVIDIA investors. And as it stands recently, I think the stock dropped about 15, perhaps 20% at one point. So the decline's been a little bit less severe recently. But historically speaking, the stock has been through the exact same roller coaster that Tesla has.
Hmm.
Yeah. May not be the same ride, but it's a roller coaster, just like you go to different theme parks for different roller coasters. It's just a
Yeah,
different
yeah.
roller coaster, right?
Still a roller coaster. Yeah,
Yeah.
ups and downs and really deep downs. And this is crazy. I mean, it's had its 55%, 55%. Here's 70%, 65%. Yeah,
Yeah.
that's huge drawdowns.
Right. And it's
Okay.
hard as an investor to sort of keep the faith during these periods. But if you could
Mhm.
have,
Yeah,
were really well rewarded. This is just a way to look at the number of days between new highs,
nice.
right? So as the days expands, the line goes up, and then you hit a new high, and suddenly you drop back down to zero again. So just to kind of measure the frequency of the number of highs,
Yeah.
and you can see that there are some pretty long periods, 600 days, and most recently almost 800 days from one previous high to the next.
Hmm.
Right, and those kinds of periods are pretty painful. Now, I'll remind people that Microsoft had a 14-year period after the dot-com bust until it hit a new high. Amazon, similar,
14 years.
14 years. So if you
Okay.
think this was bad as a Tesla
Yeah.
investor, I'm
Yeah.
sorry, but the Microsoft investors have got you beat, and same thing with
That,
Amazon.
that's the thing is Amazon. That's crazy that that's the case. Was an Amazon investor, and of course, it's like one of the best investments ever if you've held it for 20, 30 years, 20 plus years. But to hear that it actually was, under all-time highs for so long, that's
Yeah.
unbelievable. Yeah.
Yeah, and I'm sorry I just didn't have time to put the charts together, but I will at some point, and we can share those, but
Yeah.
this is nothing. This is child's play compared to what Microsoft and Amazon investors went through.
Yeah.
Yeah.
This is Nvidia.
And NVIDIA, you can see there 2010 through 2015, it was about almost 1,200 days between new highs,
Yeah.
right? And lately, of course, the new highs have become more frequent for NVIDIA, and that's been great, right? As
Hmm.
an investor, that's fantastic. I'm happy to wait 30 days between new highs. Waiting 1,200 days is a bit more painful. Yeah.
I like this chart. This is a great. I love the way that you look at things, and you find ways to explain things very easily. I like this one a lot. Thank you.
I think it really helps if you make it as visual as possible.
Mm-hmm.
In this case, this is the percent of time that Tesla trades below its all-time high, and to what degree. So, for example, on the left,
Hmm.
about 88% of the time it trades more than 5% below its all-time high. So
Hmm.
you turn that around and say 12% of the time it trades between its all-time high and minus 5%. Okay. As we go down this chart, the declines get more severe. And so on the far right, what percent of the time does the stock trade 30% or more below its high? It's about
Yeah.
a third of the time, right? About half the time it's trading at 20% or more below. So the point here is that these kinds of severe declines, 20, 30%, are
Hmm.
perfectly normal for investing in Tesla. And you know what? For NVIDIA on the next page,
Oh, similar.
perfectly
Yeah.
normal for NVIDIA investors.
Hmm.
Okay. So blame Elon all you want for declines in Tesla stock. And again, we'll have that discussion in a second, but NVIDIA has similar kinds of declines. And okay, you can blame the CEO every time. That's fine, but maybe it's just noise. Maybe some of it is just noise.
That's why it's important for you to do these kind of analysis, not only for the Mag 7, but other kinds of industries. Could you say that maybe growth stocks and story stocks and in innovation companies, this is par for the course? More about around 50% of the time, you're going to have all time highs, and then you're going to have like 50% of the time, you're like 20% or more below all time highs. That's just because they're waiting for the next jump. Yeah.
Yeah. Yeah, no, I think it's very typical, and again, I'll do that analysis for the Mag 7, and we can do a show about that and show that, and I'll do
Yeah.
it from sort of each company's IPO, so that we get the full time period. Tesla is a relatively new company compared to Amazon and Microsoft and Apple, et cetera. So the time period here is much shorter, and NVIDIA has been around longer too. But yeah, I think the numbers are very similar.
All right.
Okay. Now, again, when in doubt, zoom out. If you look at Tesla's entire record from its IPO to the present, it's massively beaten the S&P. The S&P is up about 8x since Tesla's IPO, and Tesla, when I ran these numbers, is up 190x.
Mhm.
So it's kind of amazing when you keep the previous charts in mind, particularly the red one that showed the drawdowns. How can any company make progress
Yeah.
when the stock is down that much, that frequently, and it's only hitting new highs less than 5% of the time? Well, here's Exhibit A. It did it. Does it? The gains happen very quickly. And if you're not in the stock when it goes up, you're not going to get the returns that you're seeing here for any company, Tesla or otherwise. Right? That's the big lesson I think for investors is we don't like the declines, but unfortunately that's par for the course. That's part of the game, right?
Yeah, I
That's
guess
the risk.
you can look at it the other way, which is like if you're saying, why is it that more than 30, if was it more than 50% of the time, you're way more than 20% off if it's all time high? Well, the reason is because the all time high was a huge jump up.
Mhm.
And so you spend so much more time under, below in the huge drawdowns. But then when it goes back up again at some point, like very infrequently through these years, it's just huge jumps. Yeah, that's a good way to explain it.
Mhm. If
This
you
is
don't like
great.
the ride, then fine, jump on the S&P, and you're
Yeah.
up 8x over this time period. Now, the S&P, I'll remind you, had a and has had a number of big declines in its history. Now, on this chart, there's a
Hmm.
34% decline right there that you're pointing your mouse at.
Hmm.
And just outside of this time period was the financial crisis in 08, 09, and it doesn't show on this chart. The S&P dropped 50%. And
Yeah.
after the dot-com burst, the S&P had a big decline there too. So there's a number of big declines in the S&P 500. Sorry, after the dot-com burst, it was about a 50% decline there too. So the S&P is a wild ride enough,
Hmm.
and growth stocks just kind of magnifies that. Yeah.
That's NVIDIA.
Here's NVIDIA's. Now, NVIDIA has gone up 527x over the same time period compared to Tesla's 190x. But NVIDIA has had strong, more recent results. Right. We showed in a previous show that Tesla and NVIDIA, there are times when Tesla has outperformed NVIDIA over this time period. But most recently, NVIDIA has done much better. Yeah. Doesn't mean that it always will. Doesn't mean that Tesla won't ever catch up. Right. That remains to be seen. But NVIDIA too has, the results here are multiples of what the S&P 500 gained.
Hmm. I mean, my thesis, of course, is that whenever there's a innovation, a disruptive technology, what's going to happen? The first thing that happens is the tools that people use to take advantage of that innovation will go up first. Then at some point, when you use those tools, then you actually get real return from the actual innovation. In this case, it's physical AI that can use the chips. So everybody's buying chips, creating data centers to build to create AIs. You're creating two kinds of AI, right? A generative AI, which is LLMs, and then you've got the physical AIs.
Mhm.
And it's the physical AI that's going to be way higher, I believe, than the tools. Tools will succeed and they'll be great. And I'm not saying NVIDIA is just tools, and they're trying to get into the physical AI as well. But that's the game.
It is. I think history shows us that. In the gold mining days, it was the companies providing the picks and shovels. That's the famous example.
Yeah.
And in many cases, those were the only ones that made money in that case. But from the
Hmm.
internet days, there were plenty of companies that did well building out the infrastructure.
Yeah.
That they're the biggest internet winners were the companies with the applications. And the
Yeah.
same will be true with AI as well. Yep.
All right, that was great, wonderful. Okay, so now we're going to talk about earnings, and you can compare Tesla and Nvidia. So, so one of the things that people will say is that okay, it's one thing when you have a story stock, a growth stock, and then at some point it shows up, but it's really just earnings. That's what matters. If earnings start going and there's a run in earnings every quarter, you're proving to the market, to investors that we are making money left, right, and center. Then the stock just skyrockets. Right? Is that what this is about?
Yeah, the way I think about this is that you've got different types of investors. You've got investors that have some imagination, right? There's folks like me that'll build a model for Optimus production and what that could mean for the company. And we're willing to look out a period of time and say, "Oh, look at this bright future." But you do have other sets of investors that are essentially show me the results, prove to me this company is growing its earnings, and they're much more quarterly focused.
Hmm.
So at the end of the day, the ideal situation is to have both sets of investors to be excited about the same company. And in order for that to happen, that long-term vision needs to be executed on in the near term, right? And so I wanted to show sort of the disparity right now between Tesla, which has
Mm.
that longer term promise, versus NVIDIA, which also has a long-term promise, but they are squarely executing extremely well today.
Mhm. Yeah,
And I wanted to show
as
visually the difference.
showing up as sales and cash right now.
Yep.
Okay, yeah, this is great. Okay, here we go.
So here is Tesla's chart. And I'm sorry if this is faint. The blue line is Tesla's stock price. This
Mhm,
is at really the last 5 years. So let's say from March 2020 to now, and it encompasses the previous peak. Uh, they're close to the middle of the chart, and then the big drop down to about $100 a share, and then the peak that we've just enjoyed 47 days ago up to 480, and now back down below 300.
mm,
Now, even fainter than that blue line is the red line. The red line is the analyst's earnings expectation at given
mhm,
points in time for the next 12 months out. So these are always forward-looking expectations. Ideally, you want the red line to go up in support of the stock price. If the stock price is going up and the red line is flat or going down, suddenly the stock can get on a little bit shaky footing because earnings expectations are not rising. And you can see that from the previous peak there in 2021, the stock started going down before earnings expectations went down. So I'm not
mhm,
suggesting the red line, controls the stock price, right? There are other factors going on there at the time, or maybe the analysts are also slow at adjusting their earnings expectations. Right? The market had taken the stock down, and the analysts finally got the message later and said, "Oh yeah, earnings are going to be lower." But what I'm just trying to show is that without rising earnings expectations, it's going to be very difficult for stocks to sort of hold their ground when they start to go up. And you can see most recently, earnings expectations for Tesla over the next 12 months haven't really changed.
yep,
So, as excited as we all are about Robotaxi and Optimus, Semi, and everything else, right? Dojo and everything else, we're not yet seeing any of that being built into expectations over the next 12 months. Now, it's important to say here it's not just the next 12 months that matters. It might be that the next 12 months for Tesla are pretty terrible from an earnings perspective or flat, but maybe 24 and 36 and 48 months, that's when it really starts to hit its stride. I don't think Wall Street is blind to that, but until it starts coming more into the near term, and starts getting built into their earnings expectation numbers, and typically people focus on the next 12-month number, it's going to be hard for the stock to make any headway and keep it. Otherwise, it's just going to sort of fluctuate around because you get that push and pull between the people that are long term believers and the people that are more short term focused. And on any given day, any one of those parties can win in the marketplace,
Mm,
right? But if they both are seeing what they're excited about, then that's when the stock can really move up and stay there.
mhm.
So as a case in point with that, take a look at NVIDIA's chart. Now, if we start from the left, NVIDIA, like a lot of other stocks, did really well during the COVID shutdown, right? There was that pause, and then the stock went up. But if you recall back then, NVIDIA stock then had a pretty serious tumble as the sales of the gaming chips were weak because everybody had basically bought all they wanted during COVID. Everybody was at home playing games, and then suddenly there was now some weakness. And on a year-over-year basis, it looked pretty terrible. During this whole time, by the way, I remind you that Jensen was talking about the promise of AI. Very few people listened to him. The stock was sold off. And you can see earnings expectations went down. Okay. And then finally, that future that he was talking about started to appear in the company's revenues and earnings. And ever since then, I would say that analysts have tried to sort of keep up, right? And
Yeah.
even now, on the far right side of this chart, and again, it's very hard to see. I'm sorry, this red line is very faint. But earnings expectations after this latest quarter have shot up again,
Yeah.
and the stock is still showing some weakness. But that is providing a lot of fundamental support to NVIDIA right now that Tesla
Yeah. I
does
love
not
it.
have.
Yeah. Yeah,
Okay.
so what happens is that the people start, oh my God, you created, you actually hit the earnings, you did grow, and so the stock shoots up, and then they
Yeah.
go, I don't think they're going to be able to do it again. So then the stock falls, and then they do it again, and then the same thing happens here.
Yeah.
They overshot this one, and then of course it fell down, and then they just kept proving that they're doing it again and again and again. So whereas Tesla is not able to show those right earnings yet, they're over here, they're on this side right here, they're
Yes.
talking about it. We're, it's about to come. It's about to come.
Yeah.
And no, stock's falling. Nobody believes it. Show me the next 12 months. I don't believe it. Yeah.
And Tesla had a lot of success for a while in growing earnings based on selling more EVs,
Hmm.
and that was great. But now they've hit a bit of an air pocket with that, and the business is transitioning, just like NVIDIA's business transitioned away from gaming to AI. And as we know now in hindsight, the AI part of NVIDIA's business dwarfs the gaming part, right? And everything else in Amazon dwarfs the book sales, right? And Apple no longer sells um, the iTunes player. Um, I even forget what the product was called. It's been so long, right? It doesn't matter to these companies anymore. These legacy products that they had,
iPods. Yeah.
iPods. Thank
Yeah.
you.
Yeah. So when Jensen was talking about AI and they're a gaming company, they're a gaming stock, and they're talking about AI is coming, it's very hard for anybody to believe that that's coming. In our case, we're talking about robotaxi. One of the main points you made, I love, which is some people look at 12 months, and almost all the analysts do. Some of us are looking beyond 12 months. So when somebody says, but the earnings are flat next year and the PE ratio is so high compared to the earnings expectations, well, that's because you have a 12-month look. We're looking at, and then one of the points you've made that I repeat a lot is you say it's as irresponsible to come up and say robots and robotaxi is going to be win entire markets is going to be a $20 trillion company as it is to say to put zero value
Mhm.
in the next, because you should be looking at 24 months, you should be like 36 months. And if you just put 5% chance that they will win 5% of the market by that 3 years from now, whatever, you should put some value in, but they won't until they prove it. And that is as irresponsible then to try to say it's all there. But you need to put something in. I think it's the right answer.
Well, and I think that's where there's an opportunity for retail
Yeah.
investors versus Wall Street because we know what Wall Street's looking at and not considering. That's an opportunity for retail investors to arbitrage that essentially.
Hmm.
Right. Now, the
Yeah.
price we pay for that is to be early and to deal with the volatility.
Yeah.
Wall Street prefers to wait until the revenue starts to flow through the income statement, right? So they can't be wrong. They can never be late because the revenue is flowing through.
Hmm.
Then it becomes just a question of, how long will the company have this excess growth, right? But that's a very different discussion than when will it be? And the focus that retail
Yeah.
investors often have of, oh, Tesla's always late. Elon promised this. He said it's going to be 2 weeks. It's now been 2 years. And the long suffering Roadster, you know, reservation holders have been waiting even longer. So, but that's a very different discussion than saying the revenue now is starting to hit the books.
Yeah.
Now, I think the good news for Tesla is that these two different time periods are converging, right? And Elon said it on the last conference call 2026 is going to be epic, 27 ridiculous, and 28 ridiculous. Now, of course, it remains to be seen what that actually means. But I think he's alluding to the situation that NVIDIA now is enjoying when they were back in 2022, when everybody was saying, oh my gosh, your gaming chip business is falling off a cliff. Who cares? It doesn't matter. It's not going to matter. But at that time, it did.
Yeah, I mean, the reason I'm invested in Tesla is because if it's an innovation company, and when these innovations do start hitting their earnings, the books, it's not just a 10, 20%, not even a 50% rise. It's going to be a 10x rise or, 5x, 10x, and eventually like a double. It's like, it's just so big. It's going to be equal to the size of the business today. So we're $1 trillion company today. Then eventually, right, robotaxi, if it once it gets moving, it'll be $1 trillion company, $22 trillion, $5 trillion company.
Well, it's interesting too, Herbert, because we don't have to look very far for an example of that.
Hmm.
NVIDIA,
Yeah.
right? I mean,
Yep.
there's a successful AI company, and that's
Yep.
exactly the potential trajectory that Tesla could find itself on. And as we talked about earlier, you know what? It may even be bigger because the applications part is a bigger opportunity than just building out the infrastructure. Yeah.
And so the key point now is signal and noise. What is happening? So does it matter that Tesla is rolling out FSD in China as one little step forward towards this robotaxi future? Does it matter that they just applied for, the permits? Does it matter that they're, hiring hundreds and hundreds of people for the cybercab production? All these little nuggets we keep getting along the way, they're just tiny nuggets, but they all add up to looks like the path is still moving forward. FSD is improving. They're building a compute. FSD is improving. We're on our path. And so,
Mhm. They're hiring for Optimus. They're hiring for Dojo. The semi plant is will be complete this year. They'll start producing semis. I mean, there's so many good things. It just takes time.
okay,
Yeah.
so let's change the conversation. Thank you for that. You've basically explained what happens to Tesla stock. The stock has fallen significantly, 40% from its high. A lot of investors are concerned. And then the reason why they are is two reasons, right? Or multiple. There's many reasons, of course, but the one that people keep bringing up, one is Elon hate. What's happening with Elon and Doge. There's protests. There are people. We'll talk about that, the Elon Musk paradox. But the other one is we are kind of in this. We are seeing the earnings fall. We're going to see a poor Q1. Most of us who are following this are anticipating Q1. You can understand why, right? Because the Model Y was switched to a brand new car. So there's going to be a number of production. Instead of 25,000 cars per week, we have to bring it down. We're at 2,000 cars per week right now. And so we need to, like, in one factory, we need to get all the factories up. So yes, there's going to be weakness there. People are expecting Q1 to be bad, and that's why it's hard to get excited about this promise of these huge futures when the real numbers are actually going to go down, not up. So how important is the Q1 numbers at the end of the day?
At the end of the day, they're only important from now until when Q1's reported, and then they cease to be important, and now we look to Q2, and those numbers are only important until Q3. So the short answer is they only matter for a few more weeks, and then no one will care.
Mm-hmm.
Now, what I did was take more of a mathematical approach and look at if we're looking at the valuation of Tesla today, and we've got this future of this company, how much of today's valuation mathematically is really made up of this quarter's earnings?
Mm.
And I think that's kind of interesting. Now, we know, of course, because Wall Street is near term focused, that they're going to place a greater weight on the near term results. So we just finished talking about that. The next year really seems to matter for those investors. But mathematically speaking, it's a pretty small number. So I've got some
Yeah.
examples to share with you on that.
Yeah. So you said, how important is one quarter? Now you're referring here to Q2 of last year because it was just, because you had done this, you had done this post a long time ago. So we're just going to bring it back up again. So for Q2 of last year, for example, how important is one quarter? You said, operational speaking, yes, it's very important. It's critical. It's the company builds upon the work done each quarter. But financially speaking, it's not very important. A single quarter is not important as it only accounts for a tiny percentage 0.25% to 0.5% of a company's total future discounted expected earnings.
Yeah. So this is just looking at 20 years. And again, this is a hypothetical company. This is not Tesla. But if you had a company that was growing at 20% a year,
Mhm.
okay, and you discounted those earnings back at 12%, and you had no terminal value, that basically this company is going bankrupt after 20 years. The value of the earnings in year one would be less than 3% of the total present value of the company.
Yeah.
2.8% in year one. Now, if we're talking about a quarter, divide that by four. You're now at 0.7%.
Mhm.
Okay. Again, this is a company, a hypothetical company that's only around 20 years. So even in that situation, 0.7% for a quarter is all that matters. Less than 1% of the company's value is in this next quarter coming up.
And is it true to say too that let's say they miss it and they miss it by 10% of that quarter? Well, instead of 0.7%, it's like 0.6%, It's
Yeah.
like they don't miss it, they don't go to zero. They're like they missed it. It was a bad
Yeah.
quarter. Well, what's a bad quarter? It was like 10% off or 20% off what they said they were going to do. So
Yeah.
at the end of the day, it's
Now,
like turns out to be 0.1% or less to
yeah,
the
and of
value.
course, what Wall Street likes to do is blow things out of proportion. And they say, "Oh my gosh, that
Mhm.
means every future quarter is going to be terrible," and so they bring this
Mhm.
whole sequence of numbers down,
Yeah, gotcha.
right? And that's then when you get this sort of big reaction in the market. The stock drops 20%, even though it really shouldn't,
Gotcha.
right? Because again, each quarter builds on the previous one. So if one's lower, then in theory, all the future quarters could be lower as well. But often, though, we see the companies make up for it. And particularly a company like Tesla, where they're going to have a weak Q1, they're going to have a much stronger Q2, and Q3 and Q4 will be stronger again, right? They've just refreshed the best selling vehicle in the world. There's going to be some demand for that.
At this point, again, signal and noise,
Yeah.
the Model Y is incredibly beautiful car, and the reception from the customers at this point is through the roof. So it's looking like it's going to sell even more than existing Model Y. It's like a better car overall, and it costs Tesla less to make that new Model Y than it does the old Model Y. It's
That's
like
right.
double whammy.
Yep.
Perfect. Okay.
Yep. So then this is if we factor in the fact that the company will live beyond 20 years, right? And you assume kind of into perpetuity.
Yeah.
The present value of that perpetual part of the company is about half the value.
Yeah.
Right. So now for the first year, you've got 1.3%. So now you're down to about what, 0.3%,
Point
0.35%
per quarter. Yeah.
per quarter. Right. So it's a tiny portion of the company's valuation really matters or is really tied to this quarter's results. If those quarter's results went to zero for some reason,
Mm-hmm.
it shouldn't matter as long as you were, confident the company could continue to deliver in the future.
Mm-hmm.
Right. And then this is if a company now is growing at 15%. So the growth rate has slowed. So what I'm trying to point out here is the slower the growth rate, the more important the earnings are for a company in the near term.
Mm-hmm.
But if you have a rapidly growing company, this next quarter's earnings doesn't matter hardly at all compared to a company that's growing much slower.
Yeah, I think the problem is that here you made it look like it's very consistently growing. Slide was 20% per year. This one's
Yeah.
15% per year. And of course, that's not the way it works,
No.
specifically for Tesla, which is like maybe it's going to be a flat growth year. Maybe it's a 50% year growth. And then next year it's going to be back to 20%. And next year it's like back to 10, you know.
Yeah, no, it's always going to be lumpy, and Warren Buffett has famously said, "I'd rather invest in a company that's growing a lumpy 20% than a steady 15."
Yeah,
And
he said that.
he's yeah, and
I
he's
like
kind of
that.
alluding to the point that I think investors don't get that. Investors want
Yeah.
steady, regular, comfortable
Yeah.
returns, and
Yes.
he's happy to step in there and get the lumpy 20.
I love it.
Yeah.
I
Even
I
though he's
wouldn't
never
take
been a
that
tech
from
stock investor.
exactly. I was going to say that's shocking to hear. I'm not sure, you know what I mean? From a, it's unusual
Yeah.
to hear from a Warren Buffett who seems to be somebody who cared about just steady, steady as it goes. And when I'm talking 10, 20 years, that's where I'm making money. No.
Yeah. Yeah,
All right.
he's all about the moat, and unfortunately, because he doesn't understand the technology, he's not really ever been focused on tech. Although Apple has been one of his most successful investments of all time.
Yeah.
Although I don't think that Warren sourced that himself. He's now got a couple deputies that probably brought that to his attention. But he's famous for thinking about moats around a business, right? And he said that people aren't going to stop drinking Coca-Cola, and he says, I don't care if you drink it,
Right.
just open the can, right?
Yeah.
Again, he's a product of his time. I don't ever expect him to change, but the point is that even he recognized that lumpy returns are not
Mhm.
necessarily something to fear. That's where the opportunity is.
I didn't know this. Yeah.
Yeah.
Well, we'll reserve our discussion on Warren Buffett some other day, but there's no moat. Come on. What's the moat to high-end chocolate? Purdy, or I don't get it. The brand
Yeah.
is the moat? No, I don't get it,
He
but okay.
yeah, we can dive into that in another video. Yeah, I'm a big Warren Buffett fan. I'm not
Yeah.
I think there are other pathways. And I think he could have been even more successful had he embraced technology.
Yeah.
And one of his best friends was Bill Gates, and you think that at least Bill would have convinced him to invest in Microsoft. And
Mhm.
had he done that, his results would have been even better.
It's hard to
Yeah,
predict with tech. That's the problem. There's some winners, some losers. You don't know who's going to win and who's going to lose. Some people might win at the beginning, then lose at the end. That's like what happened to Microsoft. They were winning at the beginning and then they lost for decades. They almost like could have gone bankrupt easily. And then you happen to choose the right CEO. Things
yeah.
flipped around again. So I get that. But I guess put it this way, Warren Buffett knows what he's doing. Purdy's chocolate seems to be existing today, charging $100 per, which I bought recently.
Yeah, I know
$100 for
he
chocolate
owns
boxes.
C's candies. This
I meant to
C's.
say C's. I meant to
Yeah,
say C's, not Purdy's. I meant to
yeah.
say C's. Yeah, I've got a C's nearby, and it's crazy. The $100, $25 a. Anyway, so okay, move on. Move on. Back to Tesla.
All right.
This is
Now, this is a
10% growth
company
number.
that's only growing at 10%, and yet you're
Yeah.
applying the same discount rate of 12%.
Mm-hmm.
So the future earnings are actually worth less and less and less. They're not growing.
Mm-hmm.
And so
Mm-hmm.
there, the near term quarterly results are even a bigger impact on the valuation. So I'm just trying to show again that a high growth company, the early years matter much less than the later years. Now, of
Mm-hmm.
course, with a high growth company, there's more uncertainty,
Mm-hmm.
right? So anyway,
Mm-hmm.
just to give some
Yep.
perspective on quarterly
Yep.
result, one quarter does not make a company. And if a
Mm-hmm.
company has a 1 week quarter that's otherwise a high growth business, that probably is an opportunity.
Okay, that's I liked this next analysis because I thought it was quite good. This is something I've never seen somebody explain before, but you're showing the Tesla stock specifically. The actual jump in the stock happens more overnight than during the day, and then you're going to make a comment about day traders versus overnight traders, as in you actually buy and sell, uh, and then there's this buy and hold people. Yeah,
Mm. Yeah, it's interesting. You would actually, based on this data, you should be an overnight trader, not a day trader.
yeah,
But yeah,
I love it.
the the green line
Yeah,
here
yeah.
is if you bought the stock at the closing price every day and then held it overnight or over the weekend, and you sold it the next morning, right? You bought it on the close, sold it at the open. The blue line is if you bought Tesla stock the day it started trading at the IPO at the close and you've held it ever since. And the red line, which looks like just the axis color, but it's not, is if you day traded the stock, you bought at the open every day and you sold it at the close.
Hmm.
Now, again, this is very specific and very hypothetical. It would be
Yeah.
very difficult to do this over 3,688 trading days to buy or sell at the open and the close every time and get those prices. Very difficult, if not impossible. But this is the data I have, and it's just to show it. It's staggering the difference. The Blue line, you would have turned $100 into 19,000. The green line, if you traded just overnight or over the weekends, you would have turned the $100 into $50,000, more than double just buying and holding. And the red line, you would have turned your $100 into 54 by day trading it. So isn't that interesting, right? All of the gains and more in Tesla stock has come from non-market hours.
Why is this? Why do you think, sir?
Good question. Now, we do know that this also applies to the S&P 500. A couple things I can think of. During the day, everybody trades. You've got these competitive markets,
Mm.
they offset each other. There's no winner. It's one person's win is another person's loss. Another way to look at it is from a liquidity standpoint. You earn a return for owning investments that are not liquid. Well, during the day, the stock's perfectly liquid. There's no return for that. It's as good as investing in cash. Not quite, but overnight, when the market's closed, that's an illiquid investment. You should get compensated for taking that risk of owning the company overnight or over the weekend. Another thing I think is most market moving news happens when the markets are closed. Companies don't report
Hmm.
earnings until after 4 p.m.,
That makes the most sense. Okay.
right? Or 1 p.m. if you're on the Pacific coast. So
Hmm.
that's probably the biggest part of the explanation is that
Hmm.
the market moving news happens after hours.
Yeah, that makes sense.
And then is reflected next day in the stock price where it gaps up and,
Yeah.
moves beyond that. We've certainly seen for Tesla, most of the big moves in the stock are around the earnings announcements,
Which
up and
happens
down.
after. Yeah.
Yeah,
After the up and down, but after
yeah.
market hours. Okay, very, very interesting. Obviously, it's for fun, right? This is not financial advice. We
Yeah,
don't know if this actually works. It really is pretty like you're assuming the day traders don't make any money. It's like pretty flat because you're buying, nobody does what you're saying as day traders, but
right.
it's just a fun thing during the day versus during the night.
Yeah.
That's pretty cool. Uh Buy and hold is so easy. Don't have to worry about it.
Mhm.
And it's pretty significant, pretty lucrative. So
Yeah, and we've also discussed before, the problem if you miss the best days,
yeah.
how much your return is so much less. So you really have to resist the urge to do something, right? And when the stock's going down, it's very tempting to do something to stop the bleeding, to stop the pain. But chances are that's going to be the wrong move at the wrong time.
All right. So
Yeah.
you got growth of $100 since the IPO. If you did the overnight trading thing
Hmm.
strategy, you basically said, yeah, I showed it earlier that you'd make way more money than if you, but daytime you said $54, and then if you just held it, buy and held, yeah.
Yeah. And it's interesting because the green line is quite a bit smoother than that blue one. If you put the two together,
Hmm.
I think there's a chart there that shows both of them next to each other. But um,
There you go.
it's the green line smooths out some of the volatility in the blue line. But
Hmm.
again, I don't think that's it's you can really do this reliably. This is just
Yeah.
a hypothetical example. Um, you know, and
Yeah.
again, I believe it also holds for the S&P 500 and probably for almost every other stock.
Yeah, I think this is it speaks to how volatile the stock is. So during that daytime, it's incredibly volatile, right? And um, during the nighttime, it's less volatile, but
Yeah,
yet
I mean,
it
during
goes
the
up
nighttime,
more.
you've only got
Yeah.
two data points: the previous close and then the next day's open.
Hmm.
And of course, in the daytime, you've got all the fluctuation. Yeah.
That's pretty cool. All right. I like it. I like the way that you come up with these different ways to look at things. Just take them all with a grain of salt, but they give you that little bit of extra insight of understanding a stock that you're holding and the stock that you're buying into. So one of the things, of course, is the Elon Musk paradox. Sorry, you're going to say one more thing about
Well, I was just going to say, when you put your head down on the pillow at night, you can rest easy
it?
knowing that your gains are coming while you're sleeping.
I love it. Yeah, yeah,
Yeah,
yeah.
just think about that. Put the markets, returns into perspective. Forget what happened in the market that day. You're earning your money while you're sleeping.
Yeah, but in the previous slides, you showed me that there's like hundreds and hundreds of days where it's not actually going. It's like,
Yep.
um, so Tesla is an innovation company. If you believe that you invested in a company that is, actually executing and able to create things that are inventions that are able to then become reality, that take over markets, that's what you're done. If you don't think that that's the case, you should not be in this stock because it's so volatile. It's painful to hold the stock, as you've shown earlier. Part of the reason why I think it succeeds is because of Elon Musk. He's once in a generation, maybe, lifetime kind of entrepreneur who has not only shown it in one company, but 7, 8 companies now that he succeeds. Um, he takes, what is it? It's pretty straightforward at this point. He takes something that was impossible. There's no way there's going to be a self-driving car. Too late. Why didn't he do it 5 years ago? He said he was going to do 2018, didn't do it. Well, you know what I mean? And now you and I are driving self-driving cars. We're just waiting for the final little pieces to be put in place for it to be actually regulatory approved. Um, you know what I mean? So, but the problem is that a lot of people are, especially today, in the last several weeks, you cannot ignore that Elon is tremendous hate against Elon. There's a whole group of people, a significant chunk of people, not only in the US, but now in Canada and Europe, who are standing up, protests and so forth. And people believe that this is just reasons why the stock has fallen. People don't want to buy the product anymore. And so you kind of want to give us a perspective of your perspective of the Elon Musk paradox, right?
Yeah. Yeah. This was kind of interesting because, I've had a lot of conversations with a lot of different Tesla shareholders, um, large shareholders, small shareholders, people that have been with the company a long time, people that recently invested, people that are Democrats, people that are Republican. Had a
Hmm.
lot of conversations, and I'm hearing all the concern and all the feedback around it. And I've got to say that a lot of different people are worried about a lot of different things.
Hmm.
Some people are focused on what Elon is doing with Doge, Trump. Some people are solely focused on how they perceive Elon to be behaving towards Ukraine. Some people are focused solely on what he did with the German elections, etc. All these different issues that have come up, right? My perspective on this, as I thought about it, I try to capture in this post, is that whenever you are working with anybody, be it your spouse, your friend, any business leader, we draw these invisible boxes around people, and we think that my wife should behave this way. CEOs should behave within the realms of this box. I wish he would just talk about the company and
Hmm.
focus on the business. I wish he wouldn't talk about politics. It doesn't
Hmm.
fit inside the box that I have drawn for him. My point with this post was to say that Elon Musk has always been a maverick. And everybody that invested in Tesla has liked him at certain points in time for being a maverick. We liked the fact that he was challenging the auto industry and disrupting everybody. But now that we are perceiving that he's moved out of this box that we've put him in as this maverick CEO EV disruptor, auto disruptor, and now he's disrupting something else, the government, free speech, or the media, whatever, however you want to characterize that. And suddenly it can get uncomfortable because he's no longer in the confines of the box we think of him in. And I'm sort of asking the question, is that fair of us to try to constrict him? He's always been a maverick. He's just now doing things maybe that you don't want him to do or don't like. You liked it when he was a maverick in the auto business. You liked it when he was a maverick in the space industry. You liked it when he was a maverick with Neuralink,
Hmm.
Boring Company, disrupting all this. That was kind of cool. And now he's disrupting the status quo in government. I get it. I'm not taking a side on it. I'm just sort of pointing out that maybe the inconsistency is more with us than it is with him. And that's very uncomfortable to question your own thinking about things like this. It's much easier to blame Elon. And you can look on X all day long, all these posts blaming him for this, that, and the other thing. And I'm just sort of challenging people to take a step back and look more inward and say, okay, did you put him in a box? Should he really be in that box? Is that fair? Is that appropriate? It's okay if the answer is yes. I'm just raising the question. I'm not
Yeah.
telling anybody how to think on this, but I do find it interesting, this sort of the psychology around all this. And again, my point is he's always been a maverick. And just because you loved him for that, and now he's still a maverick, and now you hate him for it, that points to the inconsistency being inside us.
Hmm.
That was my
Hmm.
those are my thoughts. It's been interesting to observe all this, right? The conversations around brand damage, and if Elon only behaved differently, doesn't he know he's turning some people off? I'm sure he does. But I think he's behaving consistently with the way he always has.
Yeah.
Just that we were okay with it then, and now we're not.
I like that. You've articulated really, really well. I like the way you set this up in just the last 5 minutes here. So I think there's two kinds of people, right? There's the Tesla investor who's looking at the Tesla investment that they've made. I put in money and I just want it to go up. And I'm struggling with whether or not I think the stock will go up or down. Then there's the Tesla investor who is looking at it more as a moral compass. Okay, this is, do I want to be supporting a CEO of a company, by the way, that has 120,000 employees, but Tesla is Elon and Elon is Tesla. Am I supporting something I don't believe in? So as the first bit is a Tesla investor, just purely investment. Is this stock going to go up? Don't you see that the car sales are going down? You pissed off a bunch of people who no longer want to be associated with Tesla that could have been buyers, now don't want to be. The famous Michael Jordan quote, right, was it's not a green, it's not a red thing, it's not a blue thing, it's a green thing. Republicans they buy sneakers too. So, very careful, didn't want to be part of politics. And he said, I'm just selling sneakers. I won't sell to as many people as possible. Can't Elon be more like that? Now, for me, when I look at it from a investment standpoint, do I want a maverick CEO that, so at the end of the day, it's like net, right? Is the volume of sales going down? Yes. Yeah. I cannot argue at this point that volume of cars, and we don't know. We don't know if it's, countered by more Republicans buying, if more Democrats sell or whatever, what the net there. But it's going to probably, let's assume that volume of car sales, but the volume of car sales falling, and it's minimal compared, my estimate, compared to what happens when robotaxi is launched and when bots are launched, that those are so much bigger than this fail. Do I wish that he did, it was rising instead of falling, and he's self shooting yourself in the foot, easily averted if you just said the right things like Tim Cook does? Yeah, but then do I want a Tim Cook or do I want an Elon Musk to do these inventions? Could Tim Cook create robotaxi? Could he create bot? No. So now Tim Cook he's done a fantastic job with the company. I'm not saying he can't make a company 20x, 100x, but it's like, this is the guy that's going to make it, the outsized gains. So anyway, that's how I look at it as an investor. Now, some people, I think this is, it's like the moral compass thing. Am I supporting somebody? Well, I like the way Alexandra Mertz positioned it, where she said that it's like, do you think Elon's an evil person or a good person? If you think he's evil, he really is a Nazi, because didn't you see the signal? He really is somebody supporting the right wing. He really is somebody who's trying to steal your social security. If you think that that's the case, then yeah, you should probably not be part of the stock. Now, again, the argument is he's one employee of 120,000 employees, but he is, you can't argue that he is Tesla. Tesla's him. So
Yeah, no, I agree with all that, and I think what Alexander said is great. I mean, at the end of the day, it comes down to trust. Do you trust Elon to do the right thing for Tesla shareholders over the long term?
yeah,
Now, he's human. He's going to make mistakes. He has in the past, and he will in the future. So you can always find fault with somebody for making a mistake. Now, I think Elon and the Tesla team learn from their mistakes, and that's what you want. Not that they stop making them, that they learn from them. So that's one thing I think that's really important. But at the end of the day, yeah, it is all about trust and this person that he is. And the extra perspective I would layer on top of that again is, did you put him in a box? Should you put anybody in a box? Right? How would your spouse feel if you put him or her in a box
Hmm.
and demanded that they behave in a certain way? You're going to get a lot of pushback from that in a relationship if you have these expectations and your spouse doesn't live up to your expectations. Right? And I think that's a big trap that people fall into in relationships. And that extends out to people that represent us in the investment world. Now, the interesting thing is with a lot of other companies and their CEOs, we don't know how they feel about all these different
Yeah.
things. Elon is
Hmm.
completely transparent about
Hmm.
his feelings about anything and everything. We haven't seen another CEO like this before. And as much as we find some of that refreshing, some of that is difficult to stomach sometimes, right? And I also challenge people to say, would you want that kind of transparency on your life? How would you hold up to scrutiny if your life was as transparent as Elon's?
Hmm.
Right? Just think about that for a second. So it's a difficult time. And the other thing too, I want to point out is that if Tesla stock was at an all-time high right now, a lot of people who have a challenge with him would not be as worried as they are. It's the combination of the fact that the stock has gone down, right? Again, which may or may not be his fault or just his fault.
As you've shown at the beginning. Yeah.
Yep. All right. That's normal. Stocks go up and down all the time.
Hmm.
You know, is it Jensen Huang's fault that NVIDIA stock is down right now after they just reported their best quarter ever and raised
Hmm.
expectations for the next quarter? Is it his? Did he not say something in the conference call that should have caused the stock to go up? Can we blame
Hmm.
him?
Hmm.
Maybe, maybe not. And I would just say, you know, step back and just look at the situation a little bit more broadly, um, and maybe not be quite so one-sided about things. But I'm not here to tell anybody how to think about Elon and what they should do with their investments. If they're not comfortable investing in Tesla,
Hmm.
I respect that. I don't have a problem with that, right? I'm just trying to provide a maybe a different perspective that some folks maybe haven't thought of in terms of how to view somebody that's as different as Elon is, right? You love him for one thing, and yet when he's doing the same in a different domain, you no longer appreciate that.
Hmm.
Maybe the issue is more with you than it is with him. And that may be an unpopular statement. There's going to be a lot of people that won't like to hear that. I get that because right now it's such a difficult time for many people to see what's going on, rightly or wrongly. And I
Hmm.
pass no judgment on that.
Well, okay. I think at the end of the day, right, there are many, many stocks to pick if you want to invest your money. And
Yeah.
if you choose to do Tesla for whatever reason you have, it's very volatile. You pointed out quite a number of aspects or characteristics of Tesla stock, and you also compared it to other stocks and showed that it's actually, yes, it is very volatile, but it's a lot of stocks are more volatile than you realized, including the S&P. And then you've pointed out that there's Elon, and he just adds yet another dimension to the whole thing. And so, yeah, not everybody should be investing in Tesla, and it's tough to invest in Tesla. But what you've done, I appreciate your charts because you've really quantified that. So far Tesla stock has been very successful. So if it does happen again, it's more likely it's gonna, when an invention happens, their disruption happens, then it's going to be a big jump. But
Yeah.
the big question is, will it happen? And is it worth going through all this crap that we're going through right now? Well, if it's an outsized gain, maybe it is. If people don't think that it's going to happen, then you should not be investing in the company at all because it's
Yeah.
just too crazy. So, yeah, thank you, CERN, as always. And I highly recommend people to follow CERN on his X account, CERN Basher. All of this that you saw today, he had already posted it. He does quite a bit of analysis. He always does a lot of work. And so if you're an investor in Tesla or actually any stock, including NVIDIA and others, you can learn a lot. Thank you, Cern.
Thanks,
Hey,
Herbert.
guys.
It's been great.
I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.